So hello everyone. So I'm making this video on buying a property versus renting a property. Whether living on rent is far better option than buying a property or not. The primary reason for making this video is that some of my friends and my colleagues, in fact my parents and the senior citizen folks or the people I'm getting in touch with, they all are giving their different opinions, and they all are providing their information that some of them are suggesting, the younger ones, specifically my colleagues and my friends, they are suggesting that they should rent the property and save the money in investment for the like mutual funds or from equities or for the debt funds. They have a much better return than real estate barely gives you a return of 4% or 3%. That's their take. On the When I reach out to the my senior folks, the this like those who are boomers or baby boomers, they are suggesting they should always invest your money in land or real estate, and they all have their opinion, and they all are basing their opinions based on information which they have or the experience they had. And if I do a quick YouTube search as well, and most of my younger folks, the young folks with whom I'm reaching out, in touch with, they are giving me a lot of these videos that in video there are a lot of these financial influencers are there who are making information like rent versus buy in buy home in India. If I just do a quick search, I'll see a lot of videos here, and these videos are basing their information that we should not buy the property, we should rent it. So they all, these informations, they are basically based on the opinions, and these opinions, they're getting from the internet, and they're trying to force it on me, and which is good for them. But I'll just uncle is also there. Okay, so a lot of things, this is great. I mean, they can provide their opinion, they can share their view. They're absolutely entitled to it, but I mean, somewhere deep down, we have to focus on the data. I mean, if we are making a big ticket investment in real estate, we should know that there should be some data behind it, right? And this is what I'm trying to address in this video. And I'm not saying any of them is right or any of them is wrong. And truth be told, uh, the actual truth lies somewhere in between. That both renting and owning is good, provided you do it at the right time. And the right time is, we'll figure out in this video itself. So in this video, I'll focus on the second thing, which is, that is, we will have focus a lot on the the facts, the numbers, and we will go purely on the maths. We'll try to assess a lot of some basic high school calculations on the impact of inflation and all. And I won't be using any fancy tool. I'll be just going through a spreadsheet. And the reason of why I am making this video in English, because I want my audience from all over India, in fact all over world, to understand how to do these calculations themselves rather than relying purely on things they get on the internet. Because there are a lot of people, a lot of financial influencers are there, and they all are given their opinions, and you can't take them at the face value, you can't take them blindly, because often I have seen that just because they have a strong distribution channel, that is because they have a good volume of view count or the subscriptions or the subscribers basically. So they think that whatever they are saying is accurate, but truth is little different here. And in this one, that's why I will focus more on the numbers, I'll focus more on the calculations, and that's what we will try to do over a spreadsheet itself. The primarily I'm making this video for my people who are in my contact, my friends, my colleagues, my parents, and the folks who have tried to advise me that whether you should buy or whether you should take have the property on rent. This is primarily for them, so that they can make out it how what was my thought process when making the calculations or whether making any decision. Okay, so before I start, I would like to first make a quote of the very famous movie. That's from Michael Burry. The movie was The Big Short. This movie is pretty famous. It released in, I think, 2015, and I like this line. I like this quote from this movie, and I really, really was always amazed with this, quote which was coming over here. That people want an authority to tell them how to value things, but they choose this authority not based on facts or results. They choose it because it seems authoritative and familiar. So basically, it's not about the content which the influencers or the so-called experts are bringing. It's just because they have this authority or they have this familiarity that makes it more acceptable or more gullible. And often it's not true. often they are not making the right kind of advices for you. And we all can do those calculations. We don't have to rely purely on them, and that's what I am trying to prove in this video, that whether you should buy a property or rent a property, you can easily figure it out after you see the whole calculations, which I have done, via just a spreadsheet. So I'll just quickly go through it, and I'll open up Excel file. Okay, and here I will, let's just try to do the calculations. First I'll try to, end objective is to find out what is the net profit and net loss in buying a property or in renting a property. So I'll just quickly calculate over here: buy property, rent property, and years. So we'll try to calculate it over the net profit which you're making in 5 years, 10 years, 15 years, 20 years, 25 years, 30 years. Okay, and we'll just try to figure out the number, and let's just say hypothetically you are making a purchase of a property uh, of 1 CR. Okay, or you can say that will be something like this. If I just put it over here, so that's the property which you have purchasing. That's a 1 CR, and so what is the seed amount you will be bringing? The seed amount usually will be around a 35%. Let's just assume for the sake of it that the seed amount which you are bringing is 35%. So the 35% will be your how much? It will be basically your 35 lakhs. Now the seed amount is 35 lakhs. So what will be the loan amount, the amount for which you are taking the loan? The loan will be 60, your this B2C home purchase amount minus the seed amount. So that will be your 65 lakhs. The rent, what is the rent which you can expect? Suppose you, instead of buying this 1 CR worth property, you take it on rent. So the it usually based on a simple calculation which is called rental yield in every city. In India there is a different cities. Tier 1 cities have a higher rental yield, tier 2 cities have a smaller or lower rental yield. I'll just quickly show it over here for everybody's understanding. So this is the rental yield which you often get. As you can see, Bangalore has the highest 4.45, and your uh, your this tier 2 cities like Patna or Lucknow, they have the lowest, I guess, 3.1%. So for the for the sake of calculation, let's just assume I am making this purchase in the city of Bangalore, and I will do the calculations accordingly. Okay, so let me just delete it over here. So I'm just quickly go to what is the rental yield, and rental yield which I am assuming will be some is a 4.45%. So let's just say it is your this, that is your 4.45 into B3 by 12, that's your monthly rent, that's 37,000. If you're buying a property of 1 CR, rent will be around per month of 37,000. Now what is the home loan interest rate? We can assume the home loan interest rate of somewhere in the range of around 8%. Let's just assume it now. So this is the home loan interest rate, and now comes what will be the, suppose instead of taking the home loan, you have put the money in the market, not purchase the property, invested that money in the market. So what is the return you can expect from the investment in the equity instrument? So for that, I'm just taking the 2x of the loan interest rate. The primary reason is that this home loan interest rate is driven by your repo rate. That's the rate at which the bank is provided the loan from the RBI, or in fact in the United States it is the Federal Reserve. So based on that, or just add some 2% or 200 basis point, you get the home loan interest rate. And that repo rate which by which the banks are lending is based on the how the growth is there in the economy. If the economy is growing fast, then the repo rate is relatively higher, but if the economy is growing slow, then there's a repo rate is relatively less. Like in India it is somewhere around 6%, but in United States it will be around 1 to 2%, because their growth is relatively smaller than what we have right now in India. So Mutual fund return, I'm expecting 16%. Inflation at the property. So I'm buying this flat, right? So what is the inflation I can expect on the with year over year? So I will expect an inflation of 4%. Why? Because I'm buying a standalone flat. I'm not buying a land actually. So with flat, there is a depreciation of the units, but there is an appreciation of the the freehold land, the land on which property is built. So keep factoring both these together, it is usually the half of the your home loan or the interest rates. So it will be just barely 4% only. Rental inflation, what is the inflation you can expect in the rent? Suppose you are paying a rent over a year, so over the year over year, what will be rental inflation? So rental inflation, again, I am assuming it will be equal to the inflation of the the home loan, or the interest of the home loan, because both are quite related with each other. Higher the the home loan interest rate, higher will be your the rental inflation as well, because it purely depends upon the growth which is being observed in the market. Now, what is the loan duration? You can have it anything. Let's just say, for the sake of it, that I am going with a duration of 20 years. So I'll just calculate it for 20 years, and this is the 20 years. Now, what is the EMI which will be calculated? So what is the EMI which is calculated? So EMI calculation is based on my simple, EMI calculator.net. I'll just quickly go to it. So I'll just go to the EMI calculator, and in the EMI calculator, I just need to get the formula for the EMI. And I guess this is the one which is the formula. Okay, so it's principal, it's a loan amount. Okay, one second, it's the loan amount, and this is the formula which is here. So I'll just apply this formula on my Excel file and see what is the number I'm arriving at. So EMI calculator will be your this, it's, yes, okay, I'll just quickly apply it, and yeah. So EMI is coming up at 54,368. We can confirm it as well. Suppose we take a 65 lakh loan at 8% interest rate. So what is the EMI which we are getting? 65 lakhs, 65 lakhs and 8%. So it's 54,369, 368.6. Okay, so just a 669. So fine, the same number which is coming up. Now, so now what we have to calculate? We will have to calculate what is the when you're buying a property. So we'll first go with the buying of the property, okay, and we'll try to see what is the numbers which we are getting for the buying the property over here. So this is what we are arriving at, and I'll just quickly format the painters. Okay. Now, when you're buying a property, let's just first calculate for the year. Year 1 by 2. I'll just do it for the 30 over the period of 30 years. Okay, cool. Okay, and I will try to see what is my yearly gain. What am I gaining yearly? So I'll just put over here, and yearly gain is over here. Similarly, I will try to find what is my total gain. What am I making from buying the property? Total gain that is accumulated over the years. What is my yearly loss? And that will be this. And what will be my total loss? It's total loss which is there. And what is the debt which I'm accumulating, because I'm buying this property on loan? So what is the debt which I'm accumulating? And what will be my net profit? This is the very important aspect. I have to calculate the net profit, that profit which I'm going to make from making this financial decision, because at the end it's not about what you're gaining, it's about what is the net profit, because that you are putting these money, right? 35 lakhs you are putting initially, so what is the net profit over the years which you are making? So for the yearly gain, at first it will be your zero first year itself. I'll just mark it. So first year it will be zero. Okay, first year it will be 0. What is the total gain second year? Total gain is my property, because I have purchased the property on year 1, so my property will be this exact property price only. So I'll just close it this, that is my gain, and that is equal to your 10 lakhs, 1 cr, sorry. What is my yearly loss? First is that, yearly loss is the EMI which I have paid. So for the EMI I'm using an sequence function. I will just do the sequence function, so that for the 20 years it will calculate for me. So I've just used the sequence function, and it is basically your EMI multiplied by the 12 months. That's your yearly loss. So what is my total loss? So for the first year my loss will be this EMI which I have paid for year 1, plus my seed, that's what I have paid, okay, and that will be my yearly total loss for the year 1. Okay, so that's something which will be equal to um, okay, so that's your loss for the year 1. Okay, the debt, what will be the debt after on the year 1? Debt will be calculated as your this EMI which is you have paid, minus the loan amount multiplied by the your interest rate of the home loan. So that's because every amount you pay, it is deducted from your loan amount. Every EMI you pay is deducted from your loan amount, and for the rest they apply the interest rate. And that's the how the all the calculations are done for the the interest calculation for all the loans, in any kind of loan, in fact. And that interest is calculated on per day basis. Basically, that's very important to understand. So for my debt for the first year will be um, this. Okay, so that's your 6 lakh 63 lakh 41,000. So what is the net profit which I'm making on the year 1? Okay, so the net profit is my minus 467,000, or basically 4 lakh 67,000 is my loss for the year 1. I'll go for the year 2. So year 2 I'll have an yearly gain will be the 4% gain on this property. So that is equivalent to your 4 lakh. So that's the number which I had. Now comes what is the total gain. So this will be this one plus this one. So again I just did it, and that will be your this. And similarly for what will be the yearly loss is, again, it's already calculated. What is the total loss? So the total loss is uh, your loss which was there, that is your your H, this one, plus that is the loss in the first year, plus the loss of the EMI on this one. So it will be basically this, and I have calculated it. Okay, what is the debt which you have? And again, you will calculate the debt by subtracting this debt amount minus the EMI which you have paid, and that's how you will arrive at the numbers. I'll just quickly do it. Okay, so that debt amount will be 4 lakh 61,000. So net profit, again it will be just by dragging it down, 5 lakh 20,000 841. Okay, similarly let's just do it for third year, and then we are good to go. Okay, I'll just quickly drag it down, and yeah, so I have it for year 30. Okay, I'll just quickly check it for the 642 5900 minus 541, and after 20 years let's just try to drag it for the 30 year as well. And it is after 30 years your net profit from purchase of the property is your you can say is 14 million or 1.4 crores. That's what you are making from this. That is 1.4 crore is the profit which you made by investing. Total money which you have invested is uh, 1.6 crores. So that's the 6 crores you have invested. And the net gain, total gain is your 31 crores. That's what you have this total gain, and that is your total payment. That's your 16.548 crores, and the what that's 16.548 millions, and the outcome is 14 million or 1.4 crores. So that's nearly around. You can say the profit is nearly around 80% or 90% of your investment. So that's pretty much good. Not good, but let's try to do the similar calculation for renting of the property. So we'll just do the calculation again. I'll create another column, and that will be for rent. And when I do the calculations for the rent, I'll do the similarly for the year one. I will have this years defined. Okay, so it will be your this, and then I'll define what is the gain which I had. Mm, then I will define what is my yearly loss, because I'm paying the rent. So yes, I am having a loss. Okay, what is my total loss? I mean accumulated over the years, means over the year on year, because I'm paying the rent, and that rent is getting drained from my account. So total loss. And then there is the yearly opportunity gain. Since you are paying rent is lesser than the EMI, so you are making saving money from there, right? And that money you can invest, and you can invest in the mutual funds to get a much better return. So I'll have just put my yearly opportunity gain. That's a very important part which is often skipped, that you're not paying the EMI, so you have a much lesser rent to pay. And since you have a much lesser rent to pay, you are often make using it, that money, to invest in the market to generate a good return. Now, what is the total gain? I mean, by all this exercise, what is you are making as a total gain, and what is the net profit here? What is the net profit in this exercise? So that's my idea. That one I will try to calculate what is the net profit here. I'll quickly create a group over here. Uh, 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 Group columns. Okay, I'll just I'll ungroup it. Okay, I'll create a group over here. Okay, so for buy you getting a net profit. Similarly, I'll create a group for here, and it will be based on columns. Again, I'm just using Excel's file. Usually we don't use MS Excel for all these kind of calculations which we do in office. We usually have this Python or the Django platform where which we try to do all the analytics. But for the from the YouTube perspective, or from the conversation perspective, or for the quick demo perspective, Excel file is more than enough. You don't need to know all these things, but it's just that I am aware, so I just did the quickly could do the calculations here. So here is my table, and I will just give you the gain, yearly loss, total loss, yearly opportunity gain. So how will we calculate it? What is the gain here uh, for the first year? So the gain is definitely my 35 lakhs of seed amount, which is getting untouched. So it is also, I'm pasting the formula. So my gain is staying as it is. What is the loss? Loss is the rent which I'm paying. What is the rent which I'm paying? It is actually this rent, monthly rent, multiplied by 12. So that will be my yearly loss. Okay, so what is the total loss for first year? My total loss will be exactly equal to the rent which I paid, because I'm not buying the property, I'm staying on rent, right? So just will be this amount. What is the yearly opportunity gain? This is very interesting. Now Opportunity gain is this, this rent is of 4,45,000, EMI is of 6,52,000. So this G minus O, that will be your yearly opportunity gain, and that amount is coming up at this, that is your 2,07,423. So what is the total gain here? Total gain is the gain which I am actually getting from the property. So I'll just do this. Okay, for the year one, net profit, net profit will be this, that is your total gain minus total loss, and that amount is equal to 3.55 million. So that's the amount which I am actually saving. That is the net profit which I made, merely because I did not take the low home loan and I stayed in the rent, by nearly doing nothing. Absolutely. Okay, so that's the gain which I had, because I'm not paying any kind of EMI or any kind of interest to any bank. Okay, so what will be the gain for the second year? This is interesting. This gain will be your gain of this amount plus the opportunity gain, and it is will be multiplied by the my index fund or the mutual fund or my any instrument investment return. So the instrument return which I am getting is around 16%. So I'll just have to do is what I have to multiply plus m plus p into the in my investment return, that is of 16%. So how will I calculate it? I will just do this, and that is my this amount which is coming. So if you look closely, it is m3 plus p3, m3 plus p3 multiplied by 1 plus b7. What is b7 here? B7 is your mutual fund return. So that's why you made around 4.3 million or 43 lakhs from the after the year one itself. Okay, what is the loss this year? Again, I'm paying the rent. The rent will increase. The rent will increase by what? By the inflation, that is 8%. So the rent will be my this. Okay, and now what is the total loss? Total loss will be a sum of these two, so I'll just do the calculations accordingly. And over here I have come to the total loss. Okay, what is my yearly opportunity gain? So my yearly opportunity gain again is my the rent which I am paying with the minus the loan. So this is amount is getting reduced a bit, but this is the amount which is there. What is the total gain? Total gain will be your again the same amount which is over here. That's it. What is the net profit? Again, total gain minus total loss, that is your Q minus O, and the amount will be your, if I just drag it over here, that will be the amount. Okay, 3,75,011. Okay, all I have to do is just drag it for 3 years, for 30 years. Okay, so now you can see by the end of 30th year, the net profit I'm making by investing in mutual fund and not buying property is 123 million or 12 crores. Basically my total investment is of 5 crores, and my gain is of 17 crores. So that's the scale is getting different altogether. And in the buy, my investment after 30 years is my investment after 30 years is 16 you can say 1.6 crores, and my gain is 3.1 crores. That's how it is there actually. So that's the, you can see that we are making a huge amount of profit by just staying on rent. Okay, and it is literally looks quite attractive. Let's just try to plot it on a map for the 5 years or 10 years plan, like what is the what we were originally trying to do. Okay, so it will be by net profit. I'll just get the data from here. So the data, I'll just put the data over here, that is by net profit of 5 years. So 5 years is basically your uh, equals to 5 years is this, and it will be your after 5 years you are in loss, but in rent after 5 years you are in profit, and it will be your okay, yes, R7, and that's it. So you are making first year, there's a net profit of 46 lakhs in the first 5 years, and for the first 5 years, after first 5 years, you are in a loss of around 4 lakh 80,000 in buying a property. Similarly, we'll plot it for the 10, 15, 20, 25, 30 years, and let me just quickly do it. So the numbers which is coming up at is like this. Okay, I'll just also paste it for the this one, and the numbers are like this here. So as you can see, it looks very interesting, right? That rather than buying a property, if you put it on rent, you will make much net profit in 30 years, 50. In fact, you will always be profitable whenever you are renting a property rather than buying property. And this is where people make a mistake, that they just look at this number and say that okay, the renting is good. However, what they don't factor, which they need to factor now, which I'll just quickly show you, is the growth of the economy. You see this rate with the interest rate, it is based on a growth of the economy. If the economy is growing fast, the interest rate will be higher. If we are right now, India and China are the only country in the world right now which are growing more than at the 5% rate. US and other developed country, and any mature countries, I mean the developed ones, they are not growing even beyond 4%. And right now we are, I think, a $4 to $5 trillion economy, and soon we will be around 10 trillion dollar economy. And once we become $10 trillion economy, neither your interest rate will be high, nor your mutual fund in returns will be that high, because they alone will be trillion-dollar firms. I mean, in fact, there are three firms which are United States in Nasdaq. I think it's Nvidia, it is Apple, and it is Microsoft, I think, and Amazon as well. They alone are $4 trillion economy. So if that situation arises, if we eventually grow after 5 or 10 years, that our interest rates are reduced, our the growth rate is the growth story which we have is reduced, what will happen in that situation? So let's just make the interest rate as 3% and see the magic. So what do you see? Did you notice that in renting a property in a developed economy is going to cause you a huge loss 15th year onward? From the 15th year itself, we are losing 2 million or 2 million rupees, or basically 24 lakh rupees. By the year 30, you will be loss will be around 2 crores alone. But with buying a property, you will have around the profit of around your 32 lakhs, or you can say that's the profit which you will have. So that's the advantage which is there in the buying a property versus the renting a property when the economy is growing slow, or the economy is not having the kind of growth which we are expecting. And that's a very important lesson for everyone, that whosoever is suggesting you to know buying a property versus renting a property, they need to do this calculation and see this themselves. The profit is there as long as the growth is there. Suppose you are growing, suppose even if you put it as 7%, still we are growing 7% of interest rate of from the home loan, and accordingly you have the mutual fund returns or the index giving it twice that return. It is fine, the inflation of the property accordingly is giving that kind of return, then yes, rent will be there. So as long as the economy is growing faster, as long as the economy of the country is going faster, renting is a great idea. But if the economy is growing slow, or if there is the economy is stagnating, like let's just say it even goes to 3%, you seriously start losing money. Let's just quickly check what happens if we put it as 4%, because eventually we will slow down, still we are losing money, we are losing substantial money. And if we are noticing it from the 15 year onwards, that there is no net profit, we are actually losing money. Why that happens? Because with time, the inflation will be there for the this property inflation will definitely be there, but the returns which we are expecting from the indexes, we will not get that return. Right now we are getting the return because we are relatively a very small economy. I mean, if I compare it with the $1 trillion markets which we have in in United States, like then we are nowhere near. I mean, even the 1% growth of stocks like Tesla, or sorry, stocks like Nvidia, just one person good is equivalent to around $10 billion, and $10 billion is the market cap of the mid cap firms in India. And what are the mid cap firms? Because people sometimes don't comprehend these numbers when we talk about in billions and trillions. So 1% growth of stocks like Apple, or stocks like Amazon, or stocks like your this Nvidia is equivalent to the market cap of mid cap firms in India. Mid cap firms like all the automobile firms, like this Hero Motocorp, like this TVS Group, like this I think Tech Mahindra. So in fact Tata Power, they all are under $10 billion firms, under 10 billion. That's the whole market cap, while there's just 1% move. And eventually when we become as a nation, grow on to become more than 10 trillion dollar economy, which might happen in next 5 or 6 years itself, then perhaps this growth which we are observing of mutual fund returns of what we are observing earlier, like we were observing the growth of 14% or 15%. In fact, index fund giving the growth of 12% is very common, which is unusual in India. I mean, unusual, but only for India, but it is not happening anywhere else. In all the other market, the growth is relatively very slow, and sooner or later we will reach that stage. And in that situation, to control the inflation, to keep the interests in check, the repo rates will be reduced, and so will be the reduced interest rates, and that will be somewhere in the range of 2 to 3%. So if the interest is reduced to 3%, in that situation owning a property will be a much better option than buying a property. And in fact, this is a kind of a real estate in itself is a huge business in in the Western Hemisphere. They call it flipping the property to just how keep a business running. In fact, there are a lot of senior folks in fact my colleagues as well, who are living in right now in Canada and United States. They themselves are as a secondary business. In fact, their spouse are into that business where they manage a lot of real estates and try to generate the rental yields from it that pays them much more than staying on rent. So that's my conclusion. That's my key takeaway for all of you, that do not blindly just go with the opinions. Do these calculations. If you want, I can share the calculations. If you have any questions, you can just raise those questions to me, and see this yourself, that there is a reason why making a home purchase makes sense, and there is also a reason why staying on rent makes sense, as long as the growth of the nation is aligned. If the economy in which you are living is growing faster, stay on rent. If the economy in which you are living is slowing, just purchase the property, rather own it and offer it on rent. That will give you much better investment returns. Okay, so this is all I wanted to say. This is all I wanted to convey to all my colleagues and my friends who had this question. I hope this video was informative, and I am not a YouTuber. You don't have to subscribe to my channel. There will not be any frequent content. It is just I made it for my friends and my colleagues and my parents and the people who would try to influence me into making some rash decision with respect to the financial instruments. Uh, if there's anything, just leave a comment. I'll try my best to answer those questions. Yeah, but yeah, comment will be more than enough. Okay, thank you. Bye bye.